Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Michi Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
And I'm going to share my screen. As I'm doing this, a quick note. Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into the live chat on YouTube. Will's watching it and he'll read it back to me. And to give you a couple minutes to put those questions in, we'll start out taking a look at the pre-market report to see if we could get insights, what's going on in pre-market hours. Then we'll move on to the questions. And this is the pre-market report. And up top, we see a calendar view, which lets you go back in time if you wish to click on a historical date, see what happened in a pre-markets on that date. We do show the last weeks of data from a high level to see if we spot anything that sticks out, unusual, or any trends. Today, we're on February 21st, and so far, we have 347 stocks that are trading higher in the pre-market, 521 stocks trading lower. As far as volume goes, we got 179 million shares trading on up volume for 62 million shares on down volume. And if we convert that volume to dollar value, we have $912 million worth of stock trading higher versus $3.2 billion worth of stock trading lower. So from that perspective, it looks like trading in a pre-market hours has a bearish lean. Let's look at it from a couple more perspectives. Then we'll jump to the questions. And if we don't have questions, we'll go to NVIDIA. They're scheduled to report earnings. And I think we'll just take a look at a couple different reports, see if we could get insights how NVIDIA is setting up pre-earnings. Okay,
Cool.
well,
Yeah.
so let's come down to this table here. And now we have a list of stock symbols that are trading in a pre-market hours with the price change in a pre-market volume, alerts. The list here is divided into the most active stocks, biggest percentage gainers, and biggest percentage decliners in the pre-market. We do have 54 stocks that made our biggest percentage gainers list, 119 on our largest decliners. And the stocks that are on this list do have to meet certain thresholds that we set for liquidity, price change, volume, because things in the pre-market tend to trade with less liquidity, low volume sometimes. So any security that's trading in pre-market hours and listed on a major US exchange meets those thresholds, it could make it on this list, including small cap stocks, ETFs, could be a leverage product, inverse product, closed-end fund. So to narrow down to a small group of stocks, we could use the filters above. If you have a watch list and you follow a certain group of stocks, you can filter this report by your watch list. We're going to use this filter in ETF. And when we click on it, you get a drop-down menu to select from. I'm going to choose the SPY ETF, which is the S&P 500 ETF. And when we click on it, we see that the list below gets filtered by stocks that are holdings in the SPY ETF. And here we have 4 stocks trading higher in the pre-market, well, that met, the thresholds for our largest gainers. and 17 on our largest decliners in the S&P 500. This also points to a bearish lean in a pre-market trading. So, pretty much we looked at it from a couple different perspectives, all looking like traders in the pre-market hours have trading with bearish sentiment. So we gave it a couple minutes. Well, if there are no specific questions on the tools, I'll go to NVIDIA.
No, NVIDIA is good. Actually, the one thing comment was made, NVIDIA earnings are today. So,
okay. All right. So NVIDIA, the big one here, reporting earnings today after the market close. And what we'll do is let's take a look at the options right now, how they're set up versus some historical moves. And then maybe we'll see what's been traded, if we have time, what's been trading in the multi-leg trades in NVIDIA yesterday. Okay, so let's go to this earnings section. I'm going to click on that. And let's start out with the implied moves in IV, okay, in historical IV crush. So here, graphically, we're looking at, I think, the last 3 years of data for earnings. And the bars here, you could see the bars are going up and down around this 0%. That's the historical implied earnings moves end of day before NVIDIA reported earnings, okay, according to the option straddle. So the option straddle is the earnings, magnitude of the earnings move up or down. And then on top of that, you could see an overlay, either red bar or green bar. And that then tracks the actual earnings move end of day by end of day next day. And then we compare the two. So if it's a green bar, that indicates that the earnings reaction, the stock was up. If it's red, the stock was down after earnings. And if the bar crosses that bracket, that means that the actual move exceeded what the straddle was implying. And if it's inside, then the move was lower. Okay, so over here, I'm hovering over May 24th as an example. May 24th, 2023, NVIDIA reported earnings after the market closed. That next day, the actual move, the stock by the end of the day was up 24.4%. The straddle was implying a move up or down of 7.2% prior to earnings. So you could see that that move broke through what the straddle implied. Okay, so this is the last 3 years of data. Here we are right now, February 21st. So far it didn't, we're not going to report earnings till after the market close. So we won't see the reaction today. Maybe after market close, we'll start seeing some trading. And this is what the straddle so far, the straddle price is implying, but that could change by the end of the day today too. Because we have all day of trading, and the straddle, depending on, the trading activity, it could increase or decrease the straddle premium. So just a really quick summary here. It says that 67% of the time in the last 12 quarters, right, last 4 years, the markets, they overestimated NVIDIA's earnings moves 67% of the time, meaning that the move itself was more muted than the option prices indicated. Okay, the option prices on average priced in 7.1% move up or down. The actual move on average was 6.7%. So that gives us a 8.4% differential between the expected versus actual, right? Implied versus actual. Keep in mind that's the last, 3 years. We don't know what's going to happen today, because we've had probably quite a run up into earnings. Actually, we could take a look and see what that did. I'm going to come back to this, but let's just see the drift. What did the stock do since last earnings? Did it continue, to rally a lot? Are we at the same price as the stock was after, the earnings and whatever it did? Or are we down? That's the question right now. How much more, premium did traders put into the stock price after earnings, or do we stay flat? So here, this is telling us that NVIDIA, if we track it, starting end of day after reporting earnings, right? Let's say whatever it did after it reported earnings, then we started tracking it from the end of that day to now. What did it do? Right? This is in between earnings, right? Post earnings drift. What did it do? Well, it's up 42.6%. So it gained an additional 42% since the last time it reported earnings. And how does that compare to what it usually does after earnings? If we took the average of what it usually does between earnings, how does that compare? Well, historically, it's been up 10.5%. So you could see here way more than its historical average. That's why, right now it's got a lot more, premium enthusiasm priced into it than usual, and possibly because a lot of maybe, positive news about AI and so forth has been coming out. And how does that move just 42% up or down? How does that compare to, just a normal standard deviation move up or down, right? Because this is the average, including up and down moves, but just the move itself, the magnitude of the move, well, historically, a one standard deviation move up or down is 22%. Okay, so this is, almost two standard deviation moves. And we could see it here. This is where we are right now, up 42%, which, let me see, I'm just eyeballing it here. November 17th, 2021, that it also did it, 47%. And it actually, after reporting earnings, it looks like it was up 8%, an additional 8% that time. So that's the one example in the last 4 years we see that it's done something similar. Okay, it's not the first time it's up, over 40% in between two earnings. Let's come back here. And I'm going to look at what is the historically, what is the 30-day IV? If we looked at the 30-day implied volatility day before earnings to day after earnings, what does it usually do? Okay, how does that, if we had a 30-day constant maturity option straddle, so we're not talking about the front month, we're talking about a 30-day constant maturity straddle. And if we looked at the implied volatility day before to day after, like where do we end up afterwards, right? Where does the straddle look like after it reports earnings? Well, here are the stats here. So on average, day before earnings, we see that the 30-day IV is 54.6. Keep in mind that's the average. That means it's been up, above it, below. We could actually come down here and look at the data points. This is the day before. These are all the different earnings dates. These are the day before. So you can see 62, 51, 57, 63. You know, if we took the average, 54.6. As high as 76, as low as 35. That's the day before. Where are we today? 61.8. So we're in that historical range above the average, but we're inside the historical high-low range. And we could see here, 62, 63, we had these in the 60s. How are we doing the day after? Okay, let's say that it reports earnings and it makes its move. We don't know what the move is, but where do we think the straddle IV, the 30-day IV, will settle by the end of the day? Right? Because then you have all day of trading. What if, I don't know where it'll open, but where do we think by the end of the day, where do we think it might settle? Well, we don't know, but let's take a look at the historical range, right? So far, this is telling us that the average end of day implied volatility, 30-day implied volatility, was 47.7, which is a 12% decline from the previous day. On average, we see a 12% decline, 47.7 end of day. If we keep following it, let's say 5 days out, just to see if a trend develops the following week, if it keeps going down, does it pop back up? Like, what is it? Is it, if it's overdone every time, it'll pop back up. If it's has further to go, we'll see a trend continue lower. So here we see 5 days later on average 45.5. So it looks like, historically, it continued, to decline as it went out further. Let's take a look at that. So 47.7. So these are the day after historical IVs, right? 34, 44, 50. You could see it, there's quite a range here. We have an average, but that doesn't mean that they're all the numbers are clustered right at the average. They could be, I'm looking at it and, it's pretty wide. So let's say 47.7 is the average, but here's the high-low range, 61, 32. So it's quite a range. Keep that in mind that even if I look at some of the ones that were like, look, right now we're in the 60s. So if I just highlight the 60, 62, next day 44, 63, next day 54, 66, next day barely dropped, 61. So there's quite a bit of variability where this could end up. And these are the next 5 days of data. So you can see here the averages kind of fall and like really stay steady for the next 4 days. It looks like the next day we see a little bit of a decline, then a little bit more the next day, and then it kind of stays steady. Okay, that's its historical IV. Let's now look at the interactive charts here. And here we get a longer history if we wanted to look at, we could look at it from a couple more perspectives. And up top here, it starts out with the historical implied straddle. Like where's the straddle price today versus where it's historically priced before earnings. Okay, so let's first look at that. Let's not look at what happens after earnings yet. Let's look at just what usually happens before earnings. Like where does the straddle usually get priced? Does it imply a 50% move, 20% move, 5% move? Like where does it usually get priced by the end of the day? And then we could compare that where we price today. Right. So on average, this is telling us that the historical implied move, historical straddle, is pricing 7.2% move. So let's click on that and look at that. So these are the historical moves. When I clicked on it, you could also click on here, implied earnings moves. Let me close this too. So these bars, what are they showing us? Is these are the historical dates, right? Prior to the earnings releases. These bars shows the straddle premiums in percentage terms, what they're implying. And you can see that these bars, they're higher, they're lower. I mean, they also, from earnings to earnings, we don't get exact same number, right? It's not like across this, the exact, you could see here that the bars are not, all stacked at the same level. There's like variance going on, and sometimes we see trends like from moving up to down and then from down to up. There's a lot going on here. So this last one over here, which is a different color, you could see for you, just to point out that this is right now where we're currently at. Okay, that's this upcoming earnings. So we don't know actually where it's going to end up later today. At the end of the day, this could change, right? So this one could still change, but this is where we're at right now. And that allows you to kind of compare to these other previous bars that show you historically where it ended up. The line here, the dotted line, is the average of all of them. So you see this last bar, the implied move is higher than the average. If I'm hovering over it, it gives us the numbers. Right now, the straddle's priced 10.8% move. Okay, that's where the option traders are pricing that 10.8% move compared to the average 7.2%. And here are the stats. Here's the average, 7.2. What is the range? The highs and lows, 10.8, where we're at right now. We're on the high end, 3.9% on the low end. So you can see this little, I think it was this little one, or maybe this little one. And then the median is 7.2. Okay, so that's the historical straddle prices implied move, right? So right now we're already on that high end. Keep in mind, this is prior to earnings. This is just looking at where we're at. Now, NVIDIA is reporting fourth quarter earnings. So we could filter out fourth quarter just to see if there's a difference. Maybe fourth quarter out of all this data, because this includes first, second, third, this includes all earnings, all the earnings quarters. If we filter out maybe fourth quarter, maybe that one tends to be higher than or lower. We don't know, like how does that compare to the overall? So we could use these filters here. I'm going to click on fourth quarter. Let's do that. And now we see that the data recalculated for us only for fourth quarter earnings. And it looks like the straddles maybe were a little bit higher in the fourth quarter, 7.5%. I think it was 7.2 before, with a max of 10.8, min of 5.3. So yeah, that's a little bit, it's a little bit high. It tends to be a little bit higher in the fourth quarter. Okay. And we could also just come down here and say, well, so far 10.8%. If we put that in there, 10.8% straddle and calculated, it already did it for us. That's in the 91 percentile, meaning 91% of the historical data, the straddles finish below this. So we're definitely on a higher range, near the high of the historical range. All right. So let's look at the actual earnings moves now. Let's see, this is what it looked like prior. Let's just look at actual earnings moves. So I'm going to click on that and keep it. It's still in the fourth quarter. So I'm going to put it back to all data. So here are the actual moves. All the bars are pointing up to show the magnitude of the moves. The green bar means the move was up. The red bar means that the move was down, but they're all the bars are pointing up, so we could compare the magnitude of the move. Okay. So here, this little blue guy is telling us up or down move. This is where the straddle is. Of course, this dotted line, that's the average, the absolute average of all these moves. And then these bars here shows that, again, there's a lot of variability. There's moves that are really, extreme. Like look at these bars over here to the, very big moves. Then we had the very like small moves, a lot of small moves as well. That's something to keep in mind. Like when you're trading this, you could see the potentials all over. These are risky, very risky straddles here. We have muted moves, we have very high moves. Here's the absolute average of all the moves, 7.1, meaning that if we converted all the moves to positive moves to take the average, 7.1, with a high move of 28.8, 29.8, min move unchanged, median move 5.3. With simple averages, this shows us the moves just positive and negative. We're not converting them to all positive. So on average, the moves were 3.6%, meaning there's a little bit of skew to the upside. The biggest move to the upside was 29.8%. Biggest move to the downside was 18.8%, with a median move of 3%. And 65% of the historical moves were to the upside, 35% to the downside. Now we could filter that out. Now for fourth quarter, did the fourth quarter distribution look similar? Was it different? Let's look at that. Since we are in the fourth quarter earnings, click on this fourth quarter, and now we have the new stats for fourth quarter. Here we see that the average move was 6.7%. With highs and low moves, median move 7.1%, similar. So the average move was a little bit more muted. Median move, I think it was similar. The simple averages still show a skew to the upside. On average, gains 3% with a max move of 14% to the upside. Max move to the downside, 8.2%. 70% of the moves were up, 30% lower. So this is going for the fourth quarter. So I'm not going to be able to get to all the tabs here because it's 9:30, but I'll end it there.
All right, perfect. Maybe we'll look at what actually happens tomorrow after the earnings. That was some very interesting stuff in NVIDIA. D, thanks so much, buddy.
All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day and hope